Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Shining bright, gold hits a new record, punching through $3,500 an ounce as traders ramp up bets on US rate cuts. Elsewhere, Chinese President Xi Jinping welcomes old friend Vladimir Putin to Beijing as the two cement their closer ties in the face of US tariffs. Plus, more change at the world's biggest food company as Nestlé sacks its CEO over a workplace affair just 1 year into the job. Well, it's back to school vibes this Tuesday. Of course, it's been a long weekend stateside for the Labor Day holiday. And now we have futures treading water on both sides of the Atlantic, really. Already in the Asia session, you've seen some very, very modest moves here. But if we flip the board over to the cross-asset picture, look at euro dollar. We're currently at a 116 handle. We're waiting for that euro area CPI print. It comes in at 10 a.m. London time. The 10-year yield at 424.78. Of course, the focus really is on the payrolls report coming on Friday. And the question being, are we going to get a subdued labour market? Is that going to confirm the case for Fed cuts? And then is it going to support the S&P's rally? Because, of course, September, a historically volatile month for Stoxx. The optimism of Fed cuts has pushed gold past that 3,500 level. We're below it now, of course, but it was a record, and we keep an eye on that. But Brent really waiting for a catalyst here. So OPEC Plus has a meeting coming up, that in focus, but as well we have to mind the geopolitics and all these US moves on Russian flows. We're going to break all of that down for you throughout the programme, but first let's go to Asian markets. Japanese government bonds jumping this morning after a solid 10-year auction, and we can speak now to our MLive strategist Mary Nicola for more. Mary, just walk us through what you're watching in Asia.
Yeah, one of the key things this morning was the Japanese bond market, bond market auction, as you mentioned. And it's interesting to see how well the 10-year went through because, again, we've got more hurdles coming through for Japan. We've got a 30-year coming later this week. And then, of course, last week we had weak demand for a 2-year. And then, of course, for Japan, you've got a combination of external headwinds and domestic headwinds that is going to keep lots of the bond market is still jittery, and every auction that we go into tends to be a lot more jittery than the previous one because of the fact that you have, for example, in Europe, you have concerns about France and what the impact of debt sustainability and, of course, the spillover effects onto Japan. And then, of course, in Japan itself, you have concerns about stagflation risks. And then we heard today from a BOJ deputy governor, there was no signs that there was any urgency to hike rates anytime soon. And that's, of course, going to keep weighing on the bond market. So we might see temporary relief now, but there's still more to come, and we're not out of the woods just yet for them.
All right, really appreciate the update, MLive market strategist Mary Nicola. Now, I want to stay in Asia and flip to the geopolitics. The Chinese President Xi Jinping holding bilateral talks with Russian President Vladimir Putin in Beijing. Xi welcoming Putin by calling him an old friend, highlighting the nation's close ties. Well, our Bloomberg China correspondent Min Min Lo joins us now for more. Min Min, just walk us through what we know was said in this meeting between Xi and Putin.
Yeah, actually, Chinese state media hasn't reported a lot about that meeting just yet, but we're looking out for any readouts from that. But it's a really, really significant one because Russian media has already reported that it's led to some deals being signed between Gazprom, the Russian state-run oil and gas company, and China. Reportedly, Gazprom and China has agreed that they will build out this Power of Siberia 2 pipeline, something that China had pushed back against for many years. Russia has has been wanting China to be a part of that. It would help Russia to divert a lot of that gas pipeline sales to Europe, to China instead. They would be able to recoup at least about a third of those gas pipeline sales. And it's important. It's an important revenue source for Gazprom, which has seen its profits really plunge after the Ukraine war. So this is a really, really, really big breakthrough, because it's been, in talks for so many years, and just now finally it's being signed. And Putin in that meeting had mentioned that relations between Russia and China are at an unprecedentedly high level. Really interesting to see this being signed at a time when Trump has threatened additional tariffs on China for its purchases of Russian oil. What is this going to mean in terms of repercussions later on when it comes to the trade agreement that China is looking to work towards with the U.S.? Certainly something to keep watching going forward.
OK, so now we look ahead to the military parade. Of course, it's going to commemorate 80 years since the end of World War II. We know that North Korea's Kim Jong-un is going to be there, but India's Modi won't. What do we read into that?
Yeah, it's interesting. Modi is one of the few notable leaders who was there for the SEO summit just yesterday, but he is not going to be present for the military parade. And it's an interesting move. It looks like he is hedging his relations here, right? On the one hand, he wants to get closer to other partners in the region, including Russia and China, as Trump punishes it for buying Russian oil. But at the same time, he's not going to want to appear on the same stage as Xi, Putin, and Kim Jong-un. Just think about the optics there. Not a good look for India, a country that prides itself as the largest democracy here. And at the same time, we heard from Trump saying that India is looking to offer zero tariffs for U.S. goods in exchange for maybe lowering of tariffs from the U.S. side. So it's really trying to play both sides and maintaining the stance of strategic autonomy here. But Kim Jong-un, on the other hand, it's a very, very big deal. One of the rare times he's going to make a public appearance, sharing a stage with other global world leaders. And interesting, just ahead of this trip, he visited a new missile factory in North Korea, and visited a chemical materials research institution as well, unveiling this new plan for an intercontinental ballistic missile development program. And really, it's in defiance of all the pressure he's been getting from the likes of the US and South Korea, at a time when President Trump has also indicated a willingness to meet with Kim, and South Korea has said they're willing to help host a Trump-Kim summit, maybe at the sidelines of the APEC summit as well. But Kim, perhaps it's a snub to President Trump in some ways, coming to China to attend the military parade and really showing that he has powerful friends in important places, and perhaps less willing to engage with Trump, especially after the fallout of the outcomes of that first denuclearization talk in Singapore in 2018.
Yeah, Kim Jong-un's first trip to China since 2019. But speaking of snubs, Min, first they held hands, then you had Putin taking Modi for a ride, literally, in his limo in China. Has Modi basically picked Russia over the US at this point?
It definitely seems so, in terms of the language and the optics that we have seen from the SEO. One of the most iconic images that we have seen from the SEO meeting is that of Xi, Putin, and Modi laughing and chatting together. It's like this energy triangle that is emerging after the Ukraine war. And President Putin, he brought his presidential vehicle all the way from Russia. He literally took President Modi for a spin. It was a 15-minute car ride from the venue of the SEO summit to the venue of their bilateral meeting. But then the two men continued sitting in the car for another 45 minutes. So they turned it into this informal one-hour meeting, which Modi said was excellent. He talked about deepening ties with Russia in every sector, from trade to space to security and culture. And at the same time, yesterday, his oil minister in India defended India's action, saying its purchases of Russian oil is not breaking any rules. India's largest state-run oil and gas company saying it will continue to buy every single drop of Russian oil available as long as it remains economical. So really, again, it looks like India is perhaps maybe giving Trump the middle finger here, but a very interesting sort of diplomacy going on, with all the flurry of diplomatic meetings that he had on the sidelines with Putin and then with Xi. But also interesting that he's talking about this, lowering of tariffs on U.S. goods at the same time as well.
I love it. Min Lo across all the geopolitical love triangles for us. Excellent coverage this week. Bloomberg's China correspondent, Min Lo. Now, as she mentioned, President Trump says that India is offering to lower its tariffs after the US slapped a 50% levy on a wide range of imports, punishing India for its continued purchases of Russian oil. Now, Bloomberg's news desk editor Balash Pence joins us for more. Balash, has India actually corroborated this, or did the president just get FOMO about not being invited to the SCO summit?
Well, there has been no corroboration from India, and President Trump didn't make it clear whether this offer might have been made recently or a little bit earlier in the negotiation process. We're not even sure at this point whether the two countries are engaged in trade negotiations in any meaningful way. So, as you suggest, Lizzie, it's hard to see it in any other way than in the light of those very extraordinary images coming out of China over the past few days of Prime Minister Modi being very, very friendly with the leaders of China and Russia, a warm handshake with Xi, a hug and a car ride with President Putin, and the latter one in the context of the U.S. criticism of India over the purchases of that Russian oil. So it's very difficult to determine before we get more details and some sort of word from Delhi whether this is an olive branch or whether this is the start of a new phase of trade negotiations between the U.S. and India.
OK, so we wait for that update. But hot on the heels of the SCO, then you have the Brazilian president convening a meeting of the BRICS leaders next Monday, a virtual meeting to discuss Trump's trade policy. Balash, is this the second round of the anti-US party?
Well, President Lula, our reporting shows, has been very careful to try to avoid that image of being an anti-U.S. party. Of course, he's the one leader in the BRICS who was not in China for the SCO summit, so he might feel the need to discuss the trade situation with his counterparts. I mean, look, when we think about the BRICS, Brazil, Russia, India, China, South Africa, all of these are countries that have been hit with some of the highest U.S. tariffs, and they have been singled out in one way or another by the U.S. So it does make sense that they would come together to talk about the new situation in global trade. And we also know that Brazil would like to make multilateralism a key concept in this summit, in these talks. And multilateralism, of course, refers to a world where the U.S. does not unilaterally impose sanctions and impose tariffs on other countries. So there will certainly be a tilt. The U.S. will be certainly front and center of these negotiations. Just how anti the tone will be, we will have to see.
All right, Bloomberg's news desk editor Balash Pence, we thank you for that update and preview. And let's go back to Washington now, because gold has hit a new record as traders ramp up bets that the Fed is going to cut rates this month. We can get more now with Bloomberg's Valerie Teitel. And Val, we're looking, of course, ahead to that payrolls print on Friday. The market's just going to hold their breath all the way until we get it.
Look, Lizzie, we're still seeing markets react to the dovish shift from Jay Powell at Jackson Hole. We're continuing to see it across precious metals. Yesterday it was silver. Now we're seeing gold jump to new record highs, trading above $35,000 for the first time ever. Gold has now jumped around 35% year to date. Call it the dovish shift from the Federal Reserve, or perhaps this is telling us that maybe budget concerns, deficit concerns could come front, back, and center in the bond market. It is a tricky month, the month of September, for the long end of the curve. Issuers across corporates and sovereigns tap a wide variety of syndications. Focus really here on Europe, though, Lizzie. We have the French government looking like it could be on the brink of falling out. Also, look at what happened here in the UK with the cabinet reshuffle there. So these deficit concerns could come front, back, and center. If you could switch the board, maybe I can talk a little bit more about fixed income. But we're seeing these French yields and these UK yields hit cycle highs, especially in the session yesterday. Those UK yields jumped by 4 basis points on that that cabinet reshuffle. So perhaps gold is just reacting to what the bond market worries are telling us. And as I mentioned, September is a busy month for issuance. We are kicking off today. Italy announcing a 2-tranche syndication, 7-year part of the curve and that tricky long end. They'll be issuing 5 billion euros of 30-year paper. This deal due to be done today.
Yeah, those gilt moves really fascinating as the Prime Minister plucks the Chancellor's number 2 out of the Treasury and into number 10. We'll see what that leaves for the budget. But Bloomberg's Valerie Teitel, we thank you for walking us through all of that. There's plenty still to come on the day ahead today economically. At 10 a.m. London time, we've got Euro area CPI. That's expected to tick up to 2.1%, but it's mostly expected to be because of energy base effects, so perhaps nothing to trouble the ECB. Then at 3 p.m. UK time, we get ISM manufacturing numbers. Factory activity expected to tick up, but stay in contraction territory for August. And then later on, US Congress returning to session. I told you it's back to school day, but you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can find it at DAYB Go. Coming up on the programme, though, EU nations look to plug the loopholes allowing Russian gas to flow into Europe. We'll discuss that next, and then later in the programme, we'll also look ahead to that euro area CPI print out later this morning with Nomura's Josie Anderson. Stay with us for that. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
This is going to get Wall Street's attention.
They're not going out and hiring a ton, but they're also not firing. So basically, you have a frozen labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Financial conditions versus economic conditions. There's a key distinction to make.
And that really is the key question for policy going forward.
The August Jobs Report. Friday on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now, a plane carrying European Commission President Ursula von der Leyen was disrupted by what authorities suspect was Russian signals interference. The GPS jamming incident affected the plane's navigation system as it landed in Bulgaria, but it did manage to land safely by using alternative navigation aids. Let's get more now with Bloomberg's Oliver Crook. He joins us from Berlin. Ollie, is this basically Kremlin intimidation?
Well, that's certainly the sort of takeaway from the Bulgarian authorities, who are basically saying that this has all the sort of signs that of a Russian sort of backed sort of jamming of GPS. That being said, the Bulgarian authorities also say that 85% of flights that fly over Bulgaria these days have some sort of interference. That being said, again, this is coming from the Financial Times. Apparently, it was so severe that Ursula von der Leyen's flight had to land using only paper maps, and that there had been apparently also other aircraft within the region that did not experience the blocking. So whether or not it was directed at Ursula von der Leyen, we cannot say with 100% certainty. That being said, the context of the trip with Ursula von der Leyen, as you can see there, walking around Poland, walking around Bulgaria to investigate and to visit an ammunition factory, this all comes into the context. So it's certainly the sort of thing that the Russians would like to disrupt in a way that is not entirely confrontational, but certainly stirs the pot. That being said, the context of the visit is also in the context of the fact that the United States is trying to drive Russia to the table, the negotiating table. There are a lot of very difficult conversations being had right now among European capitals about security guarantees for Ukraine going forward, and the potential of deploying Western troops within Ukraine in a sort of a peace arrangement in order to preserve the peace and to monitor peace. This is something that the Russians have pushed back against pretty dramatically. So all that being said, this is the context in which Ursula von der Leyen is touring Eastern Europe. I should say, though, Lizzie, that probably the most significant development over the last 48 hours in the geopolitics with Vladimir Putin didn't occur in Europe. It occurred in China, where you were talking about a little bit earlier. You see this sort of conversation in Europe about Putin slowly coming in from the cold, whether it's because he's talking to Donald Trump in Alaska, whether or not it's because he's laughing and holding hands with Modi, talking about deepening economic ties. These are all the sorts of things, Lizzie, that the Europeans are watching yet again from the sidelines develop and getting very, very concerned indeed.
And indeed, they too are trying to crank up the pressure on Russia. They're looking to fight back by closing more of these loopholes for Russian gas flows. But, Ollie, is that really possible? And how long could it take?
Well, we've seen the difficulty that the Europeans and many others have had of sort of icing out even Russian crude oil, right, with the shadow fleet and the difficulty about sort of imposing that. And with many countries, willingly customers to Russian oil and gas. We've seen the same situation in India. We've seen the United States attempt to exert pressure on Modi and his government to stop doing that. And that has just basically blatantly failed. What you have in Europe right now is the EU presidency is being held by the Danes right now. And what they are trying to do is get some language put forward in order to further constrict Russian gas flowing still into Europe. We should say that the ambition for the Europeans is already to ban Russian gas by 2027. The problem is, as you know, when gas gets into some of these pipelines that come from elsewhere, you don't know what its provenance is. So what the Danes are trying to do is to add language that basically would presume that any gas that has been exported through the Turk Stream pipeline that comes through Turkey is Russian gas and therefore would be banned and would have to be proven to be otherwise. So that would be the sort of shift in order to try to constrict those flows. That being said, of course, we know the Europeans want to buy more gas from the United States. The United States has basically got these sort of commitments of a sort of $500 billion or $750 billion to buy more LNG from the United States. So that's potentially another avenue. That being said, Lizzie, just moments before we are speaking now, crossing the wire, Gazprom signing a memo to build Power of Siberia 2 to China in order to get its gas to flow more to China. So there's no shortage of customers, as far as the Russians are concerned, particularly in the large industrial economy of China, to continue to buy the gas. But this is an attempt by the Europeans to constrict some of those dollars that are being made by the Russians in order to fund the war in Ukraine.
OK, really helpful. Pulling all those threads together for us, Bloomberg's Oliver Crook. We thank you so much. We're staying with energy. Syria has exported its first shipment of oil since Western sanctions were lifted. It follows the toppling of former President Bashar al-Assad and the instalment of a new government earlier this year. 600,000 barrels of heavy crude were exported from the port of Tartus. The Syrian government has a deal worth $800 million with Dubai's DP World to develop the Tartus port and has also signed energy deals with Saudi companies. Well, coming up on the programme, more upheaval at the world's largest food company as the Nestlé CEO is dismissed over an undisclosed workplace affair. We'll bring you the details next. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
This is going to get Wall Street's attention.
They're not going out and hiring a ton, but they're also not firing. So basically, you have a frozen labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Financial conditions versus economic conditions. There's a key distinction to make.
And that really is the key question for policy going forward.
The August Jobs Report. Friday on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now to our top stories making news this morning. Bloomberg has learned that Revolut has kicked off a process for employees to sell their shares in the company at a $75 billion valuation. We understand staff at the London-based firm will be able to sell as much as 20% of their stakes, the deal cementing Revolut's status as one of the world's most valuable fintechs. Elsewhere, Deutsche Bank has regained its spot in the Euro Stoxx 50 7 years after dropping out. The German lender joined Siemens Energy in being promoted to the Euro area's main stock benchmark. They replace Nokia, Stellantis and Pernod Ricard, which have all been hit by President Trump's tariffs. Here in the UK, Prime Minister Keir Starmer has announced a raft of changes to his team at Downing Street in a bid to reset his government and give him more influence over economic policy. Darren Jones moves from the number 2 job at the Treasury to a new role as Chief Secretary to the Prime Minister to lead day-to-day operations in his office. Recent months have seen Starmer's Labour Party trailing Nigel Farage's Reform UK in the opinion polls. And to French politics, the French Prime Minister is continuing talks with opposition parties ahead of next week's confidence vote on his budget. François Bayrou met the head of the Communist Party in Monday afternoon, but he and the leaders of the far right and socialists have all said that they'll vote against Beijing. So those are some of your top stories this morning. But coming up on Daybreak Europe, analysts see a modest uptick in euro area inflation for August. We'll be speaking to Nomura's European economist Josie Anderson for a preview of today's flash reading. That's next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda. Shining bright, gold hits a new record, punching through $3,500 an ounce as traders ramp up bets on US rate cuts. Chinese President Xi Jinping welcomes old friend Vladimir Putin to Beijing as the two cement their closer ties in the face of US tariffs. Plus, more change at the world's biggest food company as Nestlé sacks its CEO over a workplace affair just 1 year into the job. Well, a very good morning. It may be your Monday morning. Of course, it's been a long weekend stateside. Markets returning after the Labour Day holiday, but futures treading water on both sides of the Atlantic this morning. Modest gains in the Asia session earlier. They've been paired now. And really the question for the week and the month is whether the S&P's rally can continue in this historically rocky month of September. Flip the board over to the cross-asset picture. We've got euro-dollar waiting for this CPI print out of the euro area at 10 a.m. London time. 116 is where we trade right now. The 10-year US Treasury yield at 4.2478. Of course, we look ahead to the payrolls number at the end of the week. Are we going to see more weakness in the labour market, a subdued labour market, justifying the case for rate cuts? But also do keep an eye on the long end of European bonds when they open today. Of course, as Val was highlighting, we saw that weakness across the continent yesterday as we inch towards that French confidence vote. And we saw the yields rising at the long end here in the UK for gilts as well after that reshuffle at Downing Street. But gold there just below that 3,500 level now, but having punched through it previously because of the Fed cut optimism, hitting a record on the expectation of more cuts. Oil drifting higher as we wait for more catalysts really to break out of the range, but attention on the upcoming OPEC Plus meeting and on those US moves on Russian supplies. But let's focus in on that euro area data now. The headline inflation number expected to tick up a touch in August, with the jump mostly explained by base effects in energy prices. With a preview of what's to come, let's speak to our Bloomberg economics editor Zoe Schneeweiss, who's in Frankfurt for us. Zoe, just walk us through what we're expecting for this inflation print. Good morning.
Good morning. Yes, as you mentioned, we're getting the number today. We'll be getting it at 11 o'clock Frankfurt time, so that's 10 a.m. London time. As you mentioned, it's expected to tick up just to 2.1. That's still very close to that 2% target that the ECB has. Base effects, as you mentioned, explains it. The other, if you look at from a country perspective, that's explained from Germany. The Italian, Spanish, and French data all came in weaker than expected, but Germany did tick up more, was stronger than 2%, and that's then, if you look at it from what countries to blame, Germany is the one to blame here.
Well, you pass all the ECB speak for us, Zoe. You're just down the road from the central bank. Where are we right now in terms of expectations for ECB cuts for the rest of the year?
So for the rest of the year, economists are expecting one more cut, though they're not really expecting that for September. They're expecting that for December. Markets are less sure. Markets say that maybe there's a possibility of no more cuts at all. And those strong inflation readings, those around 2%, would help explain that. Additionally, the recent speakers we've had all have been more on the hawkish side. So hawks all have been saying we're sort of comfortable right now, 2%. And if Christine Lagarde herself says inflation is under control, that does indicate no movement whatsoever, doesn't it?
All right, Zoe Schneeweiss, Bloomberg's economics editor. Thanks so much for setting us up there. Let's get some analysis now, shall we? We're joined by Josie Anderson, European economist at Nomura. Nice to have you back, Josie. Zoe was just setting out the disparity between the views of markets and economists there when it comes to ECB cuts for the rest of the year. When it comes to the data, what do you think it would take to convince them that it's time to go again?
For another cut from the ECB?
Exactly.
Well,
So we think the data today will come out with 2% inflation. We're tracking it with the data that came out on Friday around 2.04. So we could see a 2.1% if the other countries tick us over. But we think the broad picture for inflation is that it will stay steady at around that 2% mark for the rest of the year. So that's in line with the ECB's target for HICP inflation. And then on economic growth, we expect it to be slightly stronger than the ECB is forecasting, particularly in Q3, and also gradually pick up over the coming year and a half. We're forecasting 0.4% quarter-on-quarter growth by mid-next year. And that's because we're actually fairly optimistic on some countries in particular. German fiscal spending should start to boost growth. And so our view for the ECB is no more rate cuts. And that's also driven by recent ECB speak after the last meeting in particular. Things we heard suggested that there will be no more rate cuts. In particular, no rate cut next week. News suggested or reports from ECB speakers suggested that the bar to a September rate cut is fairly high.
Yeah, indeed, Nagel saying that to us at Jackson Hole. And when you look through the July minutes, the word that stood out to me was resilient. And they kind of seem to be doing a victory lap over at the ECB at this point, despite the tariff uncertainty and despite the war in Ukraine. So given your optimistic view, what are the risks ahead to it?
Well, of course, there is a risk from tariffs. It's hard to interpret exactly what way they're going to cause the data to move. On inflation, one thing we're looking out for actually in today's data, in the coming prints, is there any impact on goods dumping from China? We don't think there will be, but we'll start to look out for that. That's a risk. And then, of course, there's the risk through the channel of GDP. Will the tariff impacts be bigger than we think? And there could be an impact through businesses if there's any pessimism there, but we're not seeing too much evidence of that. Surveys are somewhat holding up, particularly in Germany. They're fairly weak looking currently, but if you look in the forward-looking surveys, they're fairly optimistic. And so we do think there's not too much tariff pessimism.
And of course, euro strength has been something that's been feeding into this narrative as well. We haven't seen too much of an impact on that front when it comes to the French politics. I do wonder, when you're assessing the French fiscal situation and the market reaction to it, whether the market's giving France too hard of a time when it comes to the fiscal picture.
Yeah, well, it's certainly a tricky fiscal situation in France. The political situation is that we're faced with this confidence vote, and that could result in, we think it will likely result in Bayrou leaving, failing the vote.
He might not, but yeah.
Well, it all depends on talks this week, of course. But if on Monday he fails that vote, then we're faced with likely another caretaker prime minister. But you could also see new elections. And all of this is obviously to do with the fact that they're trying to get down that budget deficit. Bayrou proposed a £44 billion billion euro reduction, and that is at loggerheads in the government, in the parliament, trying to get that through. And so getting down the deficit is proving pretty tricky in France.
Yeah, the phrase déjà vu perhaps never more appropriate. But I just look around at the long-end yield story that Val was highlighting as well and wonder whether the French situation is really any different to any liberal democracy that's addicted to this tax-funded spending.
Yeah, you can look at other countries. It's pretty bad in France. We're asking, is France the new Italy? Because obviously Italy has struggled with these similar problems for a long time as well. And the UK as well all have, these high debt to GDP shares that make, more spending pretty tricky without financing it with taxes.
Well, yeah, you bring me to the UK. Of course, we had Keir Starmer, the Prime Minister, making this sort of reshuffle, plucking Darren Jones, Rachel Reeves, the Chancellor's deputy, out of the Treasury into number 10. I wonder what you read into that, about what it could mean for the budget and really what the risks are around this fiscal event coming.
Yeah, I mean, looking ahead to the budget, the big question is, how much headroom does the Chancellor have after, when we think back earlier in the summer, we had the failed kind of welfare bill in terms of attempts to get down spending. And so now it's likely that the Chancellor does have to raise taxes.
But which? She's ruled them all out.
Exactly. It's pretty tricky searching for tax hikes, and we've had, headlines discussing, national insurance for landlords. I'm sure we'll see others as they kind of test the waters on where they can raise taxes, because if they can't cut spending, as we've seen, and, gilt markets are kind of punishing them, then, it's a pretty tricky situation for the Chancellor to make things add up.
So, I mean, I wonder if you think she might even change the fiscal rules, or what do you think is the most likely? Because there's so much speculation. We've had speculation going all the way back to the spring statement of what levers she could pull here. What do you think that it's going to be?
She's obviously already changed the fiscal rules. They did that at the start of the government. So I think it's unlikely that she'll change them again right now. But that is an option. That's one way to make things add up, is changing the rules. Move the goalpost. But I think they're struggling probably to come up with a way, and I do think the most likely way is taxes.
OK, well, we'll look ahead to that budget later in the autumn. But Josie Anderson, really good to get your take as we preview things. The European economist at Nomura, of course. And we were discussing that euro area CPI inflation print that's coming out at 10 a.m. London time. We've just had some commentary coming in from the ECB's Isabel Schnabel. She's calling for steady interest rates. She says that policy may be mildly accommodative, and she says that she still sees tariffs as net inflationary. This is reported by Reuters. And of course, that tariff story feeding into the outlook for the ECB. As we were hearing from Josie, the expectation is that they're going to stay on hold at the upcoming meeting, but markets and economists divided over whether more cuts are to come. So we'll keep an eye on the data, but for now, you're looking at euro-dollar there at a 116 handle as we await that CPI print. Coming up on the programme, we're going to turn to Africa. Botswana's diamond industry losing its glitter as the nation faces a deep economic slump. We'll bring you all the details next. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
This is going to get Wall Street's attention.
They're not going out and hiring a ton, but they're also not firing. So basically, you have a frozen labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Financial conditions versus economic conditions. There's a key distinction to make.
And that really is the key question for policy going forward.
The August Jobs Report. Friday on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now, Nestlé has sacked its CEO, Laurent Freixe, after only a year in the job due to an undisclosed workplace affair. The Swiss food giant named Philipp Navratil, who heads the Nespresso coffee brand, as his replacement. We have reached out to Freixe for comment, but for now, Bloomberg's Allegra Catelli joins us with more from Zurich. Allegra, good morning to you. Just tell us what we know about this decision to fire Freixe, because I've been seeing a lot of Coldplay memes already.
Yes, indeed. Laurent Freixe was shockingly dismissed after a year only on the job and around 40 years in the company over, as you said, an undisclosed romantic relationship with a direct subordinate. We know that this person has now left the company. Nestlé is known for its conservative corporate culture, and we know that the matter was first brought to company officials' attention through an internal system called Speak Up. And what we also know is that Freixe will not receive an exit package. A spokesperson from the company has told us late yesterday when the news broke.
So I suppose what matters for shareholders is how the company is going to be run under Freixe's replacement, Philipp Navratil. What do we know about the challenges facing him?
There's quite a few challenges facing Philipp Navratil. He's quite young to be in this role, first of all. And in its latest results, Nestlé also posted some weaker than expected volumes, which were weighed down by disappointments in China and its health science division. Management also guided for weaker margins in the second half of the year, and risks to the downside also include obviously weaker demand, maybe due to tariffs, continued cost headwinds, and so on. Nestlé has been a show me story this year for investors. It's been a tumultuous year for the business. With negative news flow also impacting it around Nestlé's water business and its filtering methods in France. So for investors, it's a turnaround, which is progressing, but it's definitely a show me story still.
All right, Agulagrowi, thank you so much for the update on that story. We await more detail, of course. Now, I promise I didn't put the next one immediately after this. It wasn't a hint. But look, Botswana losing its shine because the diamond-fueled boom that made it one of Africa's richest nations is faltering as lab-grown gems eat into the market for natural diamonds. For more, we're joined by Bloomberg's Matthew Hill. Matthew, Botswana has always been held up as an African success story, and particularly when it comes to diamonds. It's the place where you put a ring on it. I went once for a horseback safari, and it was the envy of other African economies. What's gone wrong here?
Yeah, it's been quite startling to see how quickly things have changed. As you say, Botswana was always this country that has been seen to use its natural resource wealth to develop the country, to educate its people, and to provide better services. And suddenly it's sitting in a very, very tight spot. After COVID, there was a spike in demand and prices for diamonds, and in 2021, when everyone was buying everything. And after that, there was a bit of a slump. That's been followed by an absolute tidal wave of much cheaper lab-grown diamonds that have flooded the market. And we're seeing in countries like the US and China young buyers of engagement rings and other jewelry turning to the lab-grown equivalent because it costs, in many cases, as much as 1/5 of the price of a natural diamond. So this has wreaked havoc on revenues for Botswana, on economic growth. It's on track for its second straight year of economic contraction. And diamonds account for 80% of exports. So if you take some of that away, the pain is really acute.
But loads of economies are reliant on a single commodity. I think of Nigeria and its dependence on oil. So why should it be such an issue for Botswana?
Yes, exactly. And that's also a very important point. When you look at other countries that are relying on a single commodity like oil, economists have pointed out that generally the pain is relatively short-lived, like we've seen in the past where there's a crisis. Demand and prices for oil generally do tend to come back. But there are questions about whether diamond prices will ever come back because this lab-grown phenomenon is here to stay. So that just goes to show how urgent it is for a country like Botswana to very, very quickly try to diversify and find alternative sources of revenues and export earnings.
So how big an impact are these lab-grown diamonds having on countries that rely from revenues from natural stones? Because it's not just Botswana, is it?
Yes, there are other countries that are feeling the pinch. You've got Namibia, which is a neighbor to Botswana, which is also dealing with it to a much lesser extent. And that's the thing. I mean, Botswana is the biggest producer of diamonds by value. It's the economy that's most heavily reliant as a proportion of its economy on diamonds. So there's nowhere else feeling the pain quite like Botswana. I mean, diamonds account for 1/3 of government revenues too. So it's really having an outsized impact. The government's trying to, together with other diamond-producing nations, form a coalition where they've pledged to spend 1% of their diamond revenues on marketing natural diamonds to try convince consumers of the merits of rather buying natural diamonds over lab-grown gems. But this is perhaps a bit of a longer-term story, and we are not sure how much of an impact such a campaign will have.
All right, Matthew, it's a really interesting story. It's on the terminal for everyone to read. Bloomberg's Matthew Hill bringing us the latest on Botswana's diamond industry. We thank you. Now, I just want to turn to some breaking lines across the terminal out of the summit that's happening, of course, in China. We have Xinhua reporting that China and Russia have signed documents on energy, AI and agriculture. We have a readout of the meeting where Modi's saying that the Indian government's working on the next phase of their semiconductor mission. China's Xi saying that China and Russia should use major projects to drive cooperation between them. Modi saying that the Indian government's working on a new design-linked incentive program, and that India's trying to meet demand for critical minerals locally, and that China is willing, this is according to Xi, to keep the close high-level exchanges with Russia going, so building on the warmth perhaps that we have seen in China. Also, some other breaking news from Monte Paschi, raising Mediobanca's its bid for Mediobanca by adding about 750 million euros of cash. Monte Paschi confirming financial targets and its dividend policy as well, withdrawing the threshold of 66.7% for Mediobanca and raising its bid as well here, adding 90 cents per share as a cash component to that Mediobanca bid. So the latest news on banking there as well. We've got plenty more coming up on the programme, so do stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, let me set you up for the rest of your trading day with a few terminal charts. We've got Euro area CPI dropping at 10 a.m. London time, and the expectation is there's just going to be a slight tick up to above the 2% target. You can see all of the lines there floating around 2%. It's expected to be down to energy base effects, so perhaps no drama for the European Central Bank, at least not for its next meeting. A hold expected. Flip the board over, though, and the real data highlight of this week, of course, is the US jobs report. And the expectation is that you're going to see a confirmation of the continuation of that subdued labour market, and that adding to the case for Fed cut bets. But contrast the case of the US economy with the Chinese economy. Just flip the board one more time. We've been discussing throughout the programme that SCO summit that has been happening, President Trump excluded, of course, but the outlook for China's GDP actually recovering. And look at that compared to the white line. The US growth languishing when it comes to the forecast. So maybe that Fed cut needed after all. We've got plenty coming up for you. Goldman Sachs is head of investment banking for France on the opening trade at 8:30 a.m. London time. So stay with us for that. This is Bloomberg.